Donald Trump will be returning to the White House as the 47th President of the United States. And we also know that the Republican Party has control of the Senate. The US markets have reacted very favourably to Donald Trump's election win, with S&P 500 up over 2% early on after the results were announced. Now, this optimism is primarily driven by the expectations that the Trump administration will be able to implement favourable policies that will increase corporate earnings and perhaps also involve lower income taxes. Our assessment is that the optimism shown in equity markets, it makes sense based on the chances and the likelihood of the Trump administration being able to implement some of the favourable policies that he campaigned against. These can be very drawn-out processes and can take a long time to implement legislation. Importantly, not all asset classes benefited from the optimism that equity markets enjoyed post the announcement of Trump's win. Bond yields, for example, went higher on the announcement, reflecting investor concerns that many of the Trump administration policies, such as tariffs or potential tariffs, may increase the budget deficit and worsen the US fiscal position. The market response in Australia has been more muted, which is understandable considering Australia operates in a different economic environment and has different trading partners. However, one of the more pronounced moves was in the weakening of the Australian dollar relative to the US dollar. However, this was more due to the strengthening of the US dollar against all major currencies. MLC Asset Management has had a neutral view on equities over the past 12 months and continues to recognise that an equity allocation in any portfolio is an important driver of returns. However, we're also aware that with equities comes risk, especially over the short term. So rather than try and preempt exactly when very short-term market moves will occur, most attention of ours has been focused on understanding what asset classes can be introduced into portfolios to act as strong alternative diversifiers. Some of these asset classes include specialty finance, insurance-related investments, infrastructure, and private market assets, which are somewhat ignorant to short-term ructions such as US elections and continue to provide stable, steady returns to investors whilst listed markets move around in a more volatile manner. As markets continue to digest the results of the US election, we will likely see more and more price volatility. Thanks for listening.